Ladies and gentlemen, good day and welcome to Gopal's next Q1 FY2027 earnings conference call hosted by DAM Capital Advisors Limited. As a reminder, all participant lines will be in a listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I would now hand the conference over to Mr. Sanjay Manyal from DAM Capital Advisors Limited. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. We would like to thank the management of Gopal Snacks for providing DAM Capital with the opportunity to host Q1 FY27 conference call. We have with us today Mr. Naveen Gupta, Chief Business Officer, and Mr. Regan Raithata, Chief Financial Officer. I hand over the call to the management for opening remarks. Over to you, sir.
Thank you, Sanjay. Good afternoon and thank you for joining us for the earnings call. We hope you all had a chance to go through our investor presentation uploaded on the stock exchange. We'll share our key operating and financial highlights for the quarter ended June 30th, 2026. Q1 marked as an important quarter for Gopal Snacks as we continue to strengthen our manufacturing network and build on recovery achieved over the past year. The successful recommencement of operations at our Rajkot main facility, together with continued contributions from our Modasa and Nagpur plants, has further enhanced our manufacturing capability, improved supply chain efficiencies and strengthened our ability to meet growing consumer demand across our key markets. We delivered our highest ever quarterly revenue from the operations of rupees 422.3 crores during the quarter, reflecting a growth of 31.1% year-on-year and 3.1% sequentially. The quarter was supported by disciplined execution across operations, improved product availability, and sustained demand across our product portfolio. Demand remained encouraging across our key product categories during the quarter. Our core categories continued to perform well, while the contribution from newer markets also increased, reflecting the gradual expansion of our geographical footprint. With Rajkot now operational, we are now better positioned to improve service levels, enhance product availability and support future growth across both existing and emerging markets. The recommencement of the Rajkot main facility also marks the completion of an important phase in our operational recovery. With production now consolidated from Gondal to Rajkot, we expect further improvement in manufacturing efficiencies through lower logistics power and operating costs. Together with our Modasa and Nagpur facilities, our manufacturing network is now better aligned to support long-term growth while ensuring greater flexibility across our operations. Our focus on strengthening the distribution network also continued during the quarter. We expanded our distributor base to over 1,000 distributors while continuing to deepen our presence across core and focus markets, resulting to deliver sequential revenue growth for 5 consecutive quarters now. At the same time, our distribution management system continues to improve inventory planning, order fulfillment and supply chain visibility, helping us respond more efficiently to market demand. Alongside distribution expansion, we continue to invest in building our brand through a mix of digital and on-ground initiatives. Campaigns across OTT platforms, outdoor advertising, vehicle branding and retail visibility programs have helped strengthen consumer engagement and improve brand recall across our key markets. Looking ahead, our priorities remain unchanged. We will continue to focus on improving manufacturing efficiency, expanding distribution reach and strengthening our brands while maintaining disciplined execution across the business. With our manufacturing network now fully operational and a stronger distribution platform in place, we believe we are well positioned to build on current momentum, increase our presence across existing and new markets, and deliver sustainable long-term growth. I would now like to invite our Chief Financial Officer, Mr. Regan Raithata, to to share his perspective on financial performance during the quarter. Thank you.
Thank you, Naveen. Good afternoon, everyone. Let me now take you through the key financial highlights for the quarter ended 30th June 2026. As we reflect on the first quarter of FY27, I'm pleased to share that the company has delivered a strong start to the year, supported by improved manufacturing capabilities, disciplined cost management, and continued operational execution. During the quarter, we reported highest ever quarterly revenue from operation of rupees 422 crores, representing 31% year-on-year and 3% sequential growth. Gross profit increased to 114 crores with a gross margin remaining healthy at 27%. Despite challenging quarter in terms of significant increase in raw material prices, we were able to maintain a healthy margin through the grammage reduction, better product mix, increase in the prices, and improved manufacturing efficiency. EBITDA for the quarter stood at 31.5 crores, more than doubling over the corresponding quarter of the previous year, with EBITDA margin improving to 7.4% as compared to 4.7% in Q1 FY26. The improvement in operating profitability was primarily driven by higher sales volume, better capacity utilization, followed by the recommencement of the Rajkot mill facility, which continued to remain focused on controlling operating costs. Profit before tax increased to 18.6 as compared to 5.3 crores in the corresponding quarter of the last year, reflecting the improvement in the operating performance. As there is no exceptional items during the quarter, the PAT after tax stood at 12.8 crores. The previous quarter included an exceptional gain relating to insurance claim, and therefore sequentially it is not directly comparable. From the operational standpoint, the recommencement of Rajkot mill manufacturing facility and the consolidation of production from the Gondal facility is expected to improve manufacturing efficiencies through lower power and fuel transportation and operating costs. These benefits will reflect as the utilization improve over the coming quarters. Looking ahead, we remain focused on improving operational efficiencies, optimizing manufacturing costs, and strengthening profitability while continuing to invest in distribution, expansion, technology, and brand building. With the Rajkot main facility now operational and all our manufacturing network fully stabilized, we believe company is well positioned to build on the current momentum and deliver sustainable and profitable growth in the coming quarters. Over to you, Sanjay.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on the touchtone telephone. If you wish to remove yourself from question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, wait for a moment while the question queue assembles. The first question is from the line of Nitin from HDFC Securities. Please go ahead.
Hi Naveen ji, hi Rigan. Thanks for taking my question. So I want to check if you hold on to your delta 330 to 350 crores revenue guidance for FY27, which you have provided in Q4. Also, how should we see the monthly run rate improving in the coming festive period?
So, Nitin bhai, our current run rate is 150 crores plus. So there was a small hiccup in the month of April owing to, our Gondal facility was gas based and we shifted our Gondal facility to Rajkot. So both these events took place in the month of April. April was little lower, otherwise, consecutively our run rate is 150 crores plus as of now. So we strongly stand by our earlier guidance given of, minimum 20% growth in this financial year over last year.
Sure, sir. This is 150 crore is definitely encouraging. So my second question is pertaining to how are we navigating the inflationary setting, help us with the cost optimization measures and price hikes affected so far. Also, like, will there be any more price hike or we look to maintain pricing in the festive period?
Uh, So, definitely we will take the necessary steps, and the steps which we have taken in Q1, wherein we have tried with the inflation, we have reduced the grammage and increased the prices. Similarly, steps we continue to take for Q2 also in line with the price increase, whatever currently. We are quite confident enough that because of the strong brand which the Gopal has, even though after making grammage correction and increasing the prices, we will be able to achieve our revenue targets for the second.
Regan, your audio is not very clear. So sorry.
Let me repeat. So in Q1, we have taken the grammage correction as well as price increase, and similar things we will continue to do it in Q2 as well, in line with whatever price of raw materials still continues to increase. And to protect our profitability, we'll continue to take the necessary steps.
Nitin bhai, let me add couple of points to this. One is we have been continuously improving our product basket, and we will continue to do that. So in H2, out of 7 NPIs which are in pipeline, 5 NPIs are, non-palm oil based with healthier margin and which have synergies with our existing product category. Number one. So that will help us to keep our EBITDA margin improved. Number one. Number two is, as of now, unlike history whereas Gopal used to give more grammage to the consumer versus competition, as of now we are either at par or we are giving lesser grammage versus competition, but still we are able to maintain our revenue momentum because distribution automation is helping us a lot, whereas the other brands are depending upon the grammage sector because they do not have any alternate. So these 2 points will keep helping us in terms of maintaining our margins as well.
Sure. And how should we see the overall margin for the year? EBITDA margin?
EBITDA margin, as we guided earlier, we continue to stand with that. So as we say, our EBITDA margin for the full financial year would be between 8 to 9%.
Sure. And my last question pertains to your 5 rupees SKU. Like we have seen this salience of 5 rupees coming down from 80% in 21-22 to around 60% last year. So, like wanted to have a thought around like, is it a deliberate effort or like, is there the impact because of the fire incident or something else to it? Like how should we build a 5 rupees SKU for us going forward?
Nitin bhai, as far as 5 rupees SKU continue to give us revenue as well as reasonable profitability, we continue to sell 5 rupees SKU. If the industry takes a shift because of inflation going beyond limits, then we are actually sitting in sweet spot. Our revenues will just double because number of packets will remain constant, the value will double. So it does not bother us much. So 5 rupees price point packet gives us liberty to deal with grammage, which we have done twice in Q1.
And is there any shift in the industry 5 rupees pack salience?
Not at all visible as such. Not at all.
Sure. So this is the shift for us only. Yeah. Thank you and all the very best.
Thank you, Nitin bhai.
Thank you. The next question is from the line of Anuj D from Antique Stock Broking. Please go ahead.
Hi, team. Good afternoon. Thank you for the opportunity. A couple of questions from my end. So, in the core market, would there be any updates that you could share about how the bi-weekly servicing initiative is progressing? And how has the Western portfolio performed in the core market?
So Anuj bhai, as on date, when we speak, 38% of outlets are getting double service in a week. And if we come to this Western snacks category in core market, so just give me a moment. So wafers have grown by how much? YOY कितना है बढ़ गया? 4. YOY 15% है wafer. YOY is 15% in core markets. Wafers.
Just a follow-up on the double coverage has reached for 38% of outlets. I think it's been nearly a year and a half since we have started this initiative. So how would sort of the run rate be improving for the distributor with double coverage?
So, Anuj bhai, typically what happened, we started this initiative in May, June 25, but then we had to press the pause button by August because of supply chain disturbances. You know, when you create double service in a week, you have to give full basket of the product. When you create monster, then you have to give them food as well. So we took a pause and we restarted this initiative in the month of January, February this year. So the progress is very well and it varies from distributor to distributor. Wherever distributor is capable in terms of investment and infra, so run rate has gone up almost by 20-25%, whereas in few other cases it has gone up by 14 to 20%.
Great to hear that. Just one last question. I think we've seen a acceleration in network addition, especially in the other states, specifically Jharkhand. So is this largely because of our third-party facilities, and do we intend to continue expanding with third-party JVs?
So number of distributor rise is across other than focus states. That is largely attributed to a leaner distribution business model, whereas we are not pressing hard for range selling in with the smaller distributors. We try to give them only hero products, and it has nothing to do with third party operations. Third party operation is eventually helping us in two of the states. One is Western UP, whereas Kashipur is contributing roughly 2 crore rupees per month, and Manindragarh plant that has helped us in terms of revenues in Chhattisgarh. But it has nothing to do with distribution expansion as such. Footprint expansion से कुछ लेना देना.
Great. I'll join back in the queue for any follow-up. Thank you.
Yeah.
Thank you. The next question is from the line of Resha Mehta from Green Age Wealth. Please go ahead.
Yes, thank you. Yeah, good to see the momentum on the sales growth coming back. Basically, we had increased our trade spends. We used to be at around 3.5%. So have we reduced them, or are they still at the old levels of 3.5% thereabouts?
You are referring to trade discounts which we are giving?
Right.
Yeah. So it's current quarter it is 2.5%.
Okay. So, despite that benefit coming in, which used to be 3.5% to now 2.5%, we see that from a margin standpoint, quarter-on-quarter, we have kind of contracted. So if you can call out, like you did say that, we've taken some grammage reductions and also price hikes. So if we were to add both of these factors, then what would be the effective price hikes that we've taken since, say the last 6 odd months, and how much more gap is left to kind of cover the blended inflation that, we are seeing at a company level?
See, Resha ji, if we look at sequentially quarter, वहाँ पे there is not much gap as far as trade discount percentage is concerned. Whatever gap is there, probably if you are looking year-on-year basis, yes, over there gap is roughly around 0.6, 0.7%. If we talk about inflation, so total inflation which hit us in terms of raw material, it was 5%, out of which 4.2% we have passed on to the consumers, and 1.8% sits as an hit to our P&L in the current quarter. That also probably we are taking necessary steps in terms of further grammage reduction and the increase in the prices in the coming quarter.
So Q2 has seen further 100 bits addition in terms of inflation, right? That's what you're trying to say.
No, it would not be 100 bits. It would be slightly lower than that.
Okay. And, so of course, with this kind of revenue growth, my sense is we would have started gaining back the market share. So if, you can just, I know maybe there is no syndicated data on this, but if you can just, call out like, have, in our opinion, we managed to recoup the lost market share, or how are we, trending there?
So Resha ji, first thing let me tell you, this is the 5th consecutive quarter with sequential growth, and we have a clear roadmap that will continue to grow quarter after quarter from here onwards. Historically, our Q4 has been weaker than Q3 and Q1 has been weaker versus Q4, but we have reversed the trend in last 2 quarters successfully and will continue to do that. So growth drivers in Gujarat are very clear. It will be double service, distribution automation, and that gives us lots of confidence now with rolling out new products. So, and in terms of focus and other states, it will remain footprint expansion and distribution automation. So we will continue, the worst is behind us. This is what we can say.
Okay. So when you say this distribution automation, you are basically referring to ARS and DMS, right?
As of now, we have started a pilot in ARS, whereas our system is giving suggestive PO to the distributor. So majority of automation is towards DMS as of now, and DMS tracking, monitoring, followed by corrective and punitive measures have started giving us results.
Okay. And then, this fire loss, I think the claim of around 30-40 crores we were expecting in Q2 of the current financial year. So is that on track, or are we expecting some delays there?
We are expecting those things to fall in Q2. However, since this is coming from the insurance company, from the PSUs, but we are quite confident enough because whatever necessary documents were required are already submitted to the insurance company, and the process is going very strong.
Right. And just the last one. So I know you did, give some indication of the guidance for the current financial year, but it looks like, just to reconfirm this number, we could add roughly around 500 to 600 crores kind of revenues in this financial year. So we are looking at somewhere around a 2,000 crore kind of a revenue. And margins you said is 8 to 9%. So would that be the exit for the current financial year, or for the whole financial year you are saying it would be in the range of 8 to 9%?
So Resha ji, for the full financial year in terms of top line increase, we said we would be ending somewhere between 1,800 to 1,900.
Okay.
And As far as EBITDA margin is concerned, it's between full year average between 8 to 9% with an exit run rate close to double digit.
Understood. Very clear. Thank you so much and all the best.
Thank you. Thank you, Rachel.
Thank you. A reminder to all the participants, you may press star and one to ask question. The next question is from the line of Soham Samarthan from Motilal Oswal Financial Services. Please go ahead.
Yeah. Thank you, sir. Thank you, Navinji, Reganji. So just wanted to check in UP market, what is the growth of this quarter, if you can spell out?
UP particular?
UP market.
Uttar Pradesh market, huh?
Yes.
UP का YOY और YOY 41%. YOY is 41% from by.
Okay. And in the UP market, what are the products, the highest selling products like growth wise? Is it Gatia or Namkeen? Because last time we discussed Gatia, maybe there are some varieties over there which is almost one of the hero products for us. So if you can spell out which of the growth driver, Gatia or Namkeen within these two in UP market?
Top line in Uttar Pradesh comes just from 2 SKU and the number in terms of percentage remains constant. One is Champakali Gatia, another is Papri Gatia.
Okay. Okay. And the second thing is that in your Nagpur plant, so we know that last time also we discussed this 250 distributor addition in 250 working days and all. So which we are on a very good track right now if we look in calendar year in 2026. But if you look in Nagpur, still our capacity utilization is less than 30%. It's been almost more than 2-3 years. So I just wanted to understand what is our strategy during, within this Nagpur plant surrounding 200 kilometers area, how we are, gaining the market share or how we are doing the distribution in this particular location.
So there is one plus and one minus point to this question, Swambhai. When we look at operational efficiencies, so we identified 159 distributors who were mapped to our Nagpur plant. So out of which roughly 60 distributors we already mapped to our Modaka plant because that gives us benefit in terms of logistics cost. So that continues to put pressure on Nagpur plant in terms of lower, utilization, lower capacity utilization. Having said that, when I talk about, adding 250 distributors in a calendar year, we are on right track. That is lesser than our expectation in terms of building more number of distributors in vicinity of 300-400 kilometers of Nagpur. Though we got good momentum in Chhattisgarh, parts of Madhya Pradesh as well as Jharkhand in terms of number of distributors improvement. But we'll keep focusing on how can we improve our number of distributor count surrounding Nagpur so that capacity utilization also improves subsequently.
Is there anything different like consumer taste or some differentiate between these areas where we couldn't catch the particular product and all? Is there anything else?
Yeah, definitely. There are a lot of regional nuances. Say, for example, we introduced a product called Sabudana Chivda 1.5 years back in Maharashtra. So that's a super hit product. We sell roughly 80 lakhs, 90 lakhs in Maharashtra alone per month. But we don't manufacture in Gujarat. And vice versa, we sell roughly 25,000 cartons of Sabudana plain in Gujarat, whereas in rest of India we hardly sell. We don't sell. We fail to sell. There are a lot of regional choices. Like in Uttar Pradesh, we sell roughly 50,000 cartons of Champakali Gatia every month, whereas in Gujarat we just sell 4,300 cartons of Champakali Gatia. There are a lot of regional tastes and preferences.
Got it. Thank you so much. Thank you.
Thank you so much.
Thank you. The next question is from the line of Saurabh Beria from Samiksha Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. I just wanted to know on the part that this year we'll be doing a margin of 8 to 9%. So what is the max achievable margin we are targeting? That on a sustainable basis, once the Rajkot facility is fully in force and assuming we are fully able to pass on the prices which the inflation would suggest us. So what is the sustainable margin we are targeting at?
The sustainable EBITDA margins which we are targeting is somewhere around 11 to 11.5%. That's what is sustainable EBITDA margins we are targeting.
And if I talk about its ramp up, till when do we expect it to happen? Like FY28, 29, if you can give a gradual ramp up of the EBITDA margins.
See, it will ramp up gradually. As we said, this year our EBITDA margins will be 8 to 9% with an exit run rate close to double digit. Similar two things will happen in the next financial year where our exit run rate would be close to 11%. So on an average out basis, if we talk about, that should come somewhere around, I would say, mid of 2020.
Okay, decent. And what strategy we have in place for our core market, Gujarat? Because if you look at our Q-on-Q figure, we had only a flattish growth in our core market, and the main selling product here is Namkeen and Gatia. So are we planning to expand the growth via the new products which are in place, or still we have markets of Gatia and Namkeen where we stand as unpenetrated?
Yeah, Saurabh bhai, so as I earlier stated, on company level, our current run rate for last 3 months has been 150 crores plus. We understand that core markets on sequential basis did not grow. So there was a clear reason that in April when we had disturbance of 5-6 working days owing to gas shortage plus plant shifting from Gondal to Rajkot. So the entire 12 crore, 13 crore top line loss came in the core state only. So Nagpur, the states getting catered from Nagpur were never impacted. So now from May onwards, there is 0% disturbance in terms of operations. So that is why May and June were 150 crores plus, 150 crores plus, and subsequently also we have the same run rate.
Oh,
as far as post-strategy in core market is concerned, now since our operations are stable, so my speed of improving outlets with double service will also double. That speed will double. So that helps me to gain a confidence that now I can roll out more number of products, which gives me better margins, and this is how I can take leverage of distribution automation as well as increase in headcount, feet on street headcount.
Okay, perfect. That helps. And another question is, right now in Gujarat, if you have a number on what is the organized versus unorganized market of Gatia in particular, and how is the transition taking place? Like, are people switching from loose Gatia to buying packaged Gatia? So if you can shed some light on it.
To my estimate, still in Gujarat, roughly 65% market is unorganized, Saurabh. And it has been happening for last 3-4 decades now that, market is getting shifted from unorganized to organized, and it will continue to happen.
Okay. And what is the expected run rate in the core market which we are targeting for this year? Like overall it's 150 CR, but especially in the core market, what is the run rate we are targeting at?
From here onwards, we are targeting 100 crores plus per month.
Okay. Perfect. That helps. Thanks, Naveenji.
Thank you. The next question is from the line of Abhishek Mathur from Systematic. Please go ahead.
Yes, sir. Good afternoon, sir. Thank you for the opportunity. First, on our network expansion, network reach, I just wanted to check in terms of retail touch points, what would be the current reach as of now? And what is the plan that you have in terms of increasing the retail touch point reach over the medium term, let's say next 2 to 3 years or so?
As of now, our retail touch point through the distributor who are on completely RDMS is 4,24,000 on national basis. So roughly 12 to 15% business is still not on DMS. So assumingly there are 60,000-70,000 more outlets which are catered through our distributors but are not getting captured on DMS. Besides this, since we as a brand do not sell much in wholesale, our dependence on wholesale is very, very low. Still, our assessment is that there are roughly 40,000 to 50,000 outlets which are getting indirectly catered. So as on date, as a brand, we are available somewhere between 5.25 lakhs to 5.5 lakhs outlets. And going forward, since we already are working on footprint expansion as well as distribution automation, so by end of this year, we will definitely be present at 6 lakh outlets.
Understood, sir. And where will this expansion largely take place? Is it fair to assume that this will be more in our focus markets?
Majority of these outlets will come from focus markets, but because of double service, that will definitely help us in terms of some improvement in core state as well. Not very, very high in terms of percentages, but even if I am able to add say roughly 15,000 outlets in my core state, so that's a good number.
Got it, sir. And secondly, in terms of brand spending, how are we thinking about it in the near term? Because a number of other companies have indicated aggression in terms of A&P spending. Many of them are planning to step up A&P spending in advance of the festive and also beyond. So what is our sort of commentary on that, either in terms of as a percentage of sales or in terms of absolute growth, if you can indicate the color around this?
We in fact, have controlled our marketing expenses in Q1 to manage that inflationary pressure. So far, in price point category, it is more about distribution and less about marketing endeavor. Having said that, we continue to aggressively invest in shop boards, vehicle painting, participation in OTT platforms, some local events, etc. So in percentage term, I think Regan Bhai will be able to throw some light on.
In Q1, our spending is around 1% of the.
Hello.
Yeah, yes, you were saying?
Yeah. What I was saying, in Q1, our spending is 1% of the revenue.
Got it, sir. And this is expected to be maintained in the next few quarters also?
So we had budgeted in fact 2.2% on annualized basis, but in case there is some ease out in inflationary pressure, we will increase our spending on A&M.
Very clear, sir. Thank you. That's it from me. Thanks and all the best.
Thank you.
Thank you. The next follow-up question is from the line of Anuj D from Antique Stock Broking. Please go ahead.
I think just a couple of follow-ups. So what would be sort of the overall potential network in Maharashtra? Because during the quarter, we saw some bit of reduction. And was there any specific reason for this reduction?
In Maharashtra, in terms of number of distributors?
Yeah, quarter on quarter, there's I think 7 distributors were reduced on a net basis.
No, I think there is some confusion. Just give me a second.
The other question was, we have been planning an expansion in export markets for quite some time. Have there been any updates regarding that? And any commentary on our alternate channel of distribution, the quick com, railway, etc.?
Yeah, let me tell you, the distributor count in focus states, it was 440 in Q1 FY26. It went up to 530 in Q4 FY26. And in just concluded quarter, which is Q1 FY27, it was 567. It did not drop. And in other states as well, it went up from 110 to 129. Coming to your second question in terms of alternate trade channels. So e-commerce, we did exactly 2 crore number in Q4 and we did 2.79 crores in Q1 of FY27. Modern trade, is at par. It was 1.85 crore in Q4 FY26 and it remained flat.
Sorry, I think there was a miscommunication. I was asking specifically about Maharashtra.
Oh, just
regarding the...
Hello, Mr. Anuj.
Yeah, just a moment.
Yes.
So in Maharashtra, so we had 194 distributors and then it went to 205 distributors. Now it is 198 distributors. So I will have to get into the details. So that's not a very big number to worry about, but definitely I'll get into the details.
But overall, what would be sort of our plan to grow in Maharashtra in terms of, say, network addition, or what is the overall potential of the Maharashtra market as per your assessment?
In Maharashtra, traditionally, our majority of our value comes from Vidarbha belt and Khandesh belt. So in terms of strategy in Maharashtra, Marathwada falls between Vidarbha and Khandesh. So that is a sweet spot for us. So we are focusing a lot in Marathwada. Coming to Pune and Mumbai market, those remains tough markets for us. And, our volume and value are also not very great in Mumbai and Pune market. So strategy will be to grow more around Marathwada and the area surrounding Nagpur.
Great. Thank you. Good luck for the coming quarter.
Thank you, Anuj.
Thank you. The next question is from the line of Srishti Pardesi from Motilal Oswal Financial Services. Please go ahead.
Hi, Naveen ji, Regan ji. Good evening. This is Shirish Pardesi from Motilal Oswal. Sir, I was more curious. When we look at or look back last 1 year, we have spent a lot of time in the revival of the business in terms of supply chain. And also, when I look back, Q1, the GST rationalization happened. There was upstocking, downstocking, which happened. Q2 observation is that inflation suddenly picks up. And in this context, how the regional retail or regional small brands has behaved. And in that context, when we have shown the growth, how the competition is behaving. Because to my sense, everybody would have taken the part of inflation passed on to the consumer in terms of grammage adjustment. So what I wanted to understand two-prong. One is that how the demand situation is happening in our core state. And second, is there any visible data where the unorganized or local players have been exiting or their scale of operation has come down?
Girish bhai, good afternoon. So coming to your first question in terms of regional players in our core states, so we don't see any major impact as such. Whatever brands were operating, those are operating. Name it Awadh, Balaji, Gokul, Srihari, all the brands are present. and we don't see any churning as such. And coming up to the national level, we noticed, two brands got shut. One was based out of Rajasthan, Nathdwara, called Miraj brand. Another was Godavat Group brand, Star brand based out of Kolhapur. But now Miraj have now restarted the production as well as distribution. So, we have not noticed any specific change in behavior of regional brands.
Okay, that's helpful. Second question on the other snack product categorization. Last year we did 10 crore, now we are doing 24, 23 crore. What is the mix of this product and where it is selling, and which are the products you think? Because if we are doing average 24, 25, it's a big number. Maybe we'll do about 120 crore in full year.
Yeah. So just give me a moment. I'll tell you which are the other products. So other products are mainly, one is our short bow noodles, then rusks are there, toast rusk, wafer biscuit is there, wafer roll is there, jeera biscuit is there, and then washing bar is there. And if we talk about, NPIs, so out of 7 NPIs which we have planned in Q2 and Q3, 5 are non-palm.
Okay. Okay.
And these to sell, across geographies. However, in newer distributor, we are very cautious and we are selling only hero products there in our newer distributor and smaller distributor. We don't push range selling in smaller and newer distributors.
Okay. Okay. My last question on the inflation part. What is current level of inflation? Because we have taken some partial price increase. So I just wanted to understand what is the current inflation, how much we have passed and how much can come in Q2. And any thoughts on the raw material holding till what time we have good thing in hand? I understand the fuel inflation based on crude oil is not in our control, but maybe just wanted to understand how we have stacked up.
Hi, Shirish. As far as Q1 is concerned, our total impact due to increase in raw material prices was 5%, out of which 4.2% we have passed on to the consumer and 0.8% we have taken in hit. And considering the current raw material prices, another 0.2, 0.3% still there is a hit which we will definitely pass on to the consumer. As far as storage of raw material is concerned, chana we have stored almost till Q3 end. Over there also there has been inflation, but that is not hitting our P&L. Potato we have stored it. Palm oil and cabinet prices we continue to continuously buy from the market, but we don't foresee any meaningful price increase over there in an immediate near future.
Okay. So I would assume that if our guidance is to grow beyond 20%, maybe about 75-80% should come from volume and maybe you can say that 20% should come from the price increase. That's the way we should look at it for the rest of the year?
Yeah, sure.
Yes.
Okay, wonderful. Thank you and all the best.
Thank you, Shirish.
Thank you. The next question is from the line of Adarsh Mishra from Independent Research Firm. Please go ahead.
Hello. Good afternoon, sir. I'm audible?
Yeah, that's right. You are audible.
Sir, I just wanted to know the numbers in terms of future revenue in 2028 and 2029. Revenue growth in terms of percentage and EBITDA and PAT.
It's not clear. Can you please repeat your question?
One second. Sir, I just wanted to know the numbers of revenue growth numbers and EBITDA and PAT margin numbers.
Revenue growth in Q1 has come 31.1% on YOY and 3.1% on sequential basis, right?
Okay.
So are you asked about the future growth numbers?
Yes, I'm talking about the future growth numbers on 2028.
2028.
Yeah.
So, Atul, in the current year, we are maintaining our stand of giving annualized growth of 20% plus, and subsequently, we continue to maintain our stand of delivering minimum 20% CAGR on revenue.
Okay. In EBITDA and in PAT margin?
EBITDA margin, as we see, this year it is a range of 8 to 9% with exit to double digit. Similarly, here it would be, when I say next, it would be 27, 28, somewhere around 10 to 11% with an exit to near to 11%. And in terms of PAT margin, it would be around 7 to 7.5%.
Okay. And I just wanted to know is any new order book has come from companies open?
So we are a FMCG company, others buy, and typically we are not B2B company. So our even our per day run rate remains static. It does not happen like we are doing month-end billing or something like that. So there is nothing like order book kind of thing.
Okay, that's it from my side. Thank you.
Thank you.
Thank you. The next question is from the line of Prithvi Vora from Vora Investments. Please go ahead.
Good evening, Arvind. One quick question. In our core markets, which is leading the business? Which is the full category? Is it namkeen or chips or gatia? And which one would be the next push product? And more ads or with a more focus on distribution?
Yeah, good afternoon, Mr. Vora. So in core markets, gatia is our leading product, followed by product basket which we call as namkeen. So namkeens have multiple products, which include like say murmura and tikha meetha mix, etc. And then followed by snack pellet category, which is fryams category, and then followed by wafers, potato wafers. So gatia will continue to be our focus category to drive the overall value as well as volume, because that is our hero product and globally we proclaim to be number one gatia company. Having said that, we will do multiple endeavors to improve consumer traction as well as buying by the retail on our potato wafers category. So we will see those numbers in the current quarter as well as subsequent quarter, and that those will remain sustainable henceforth.
So Naveen, one more additional quick question. So the chips category and the namkeen category for the core markets like Gujarat and Maharashtra, do we have a separate team which works on this category? Because both these categories are very, very large. When we see across India, with competitions being totally separate. Let's say for Gujarat, it's Balaji on chips, whereas if you go to North, it could be Lay's and stuff like that for chips. For namkeen, it could be totally different. So is there a separate team which is focusing, or is it all part of the same structure?
Very interesting question, Mr. Vora. So we have a clear-cut laid down strategy. So we have different strategy in Gujarat and different in Maharashtra. In Gujarat, when we say double coverage in a week, so the product basket has been divided into two parts. The overall basket remains with the same distributor, but the salesmen are divided now basis product category. However, our throughput per outlet as well as throughput per distributor in Maharashtra has not reached that mature level. It is still in developing stage. So it is not possible or financially sensible for us to split the coverage there in Maharashtra as of now. But Gujarat, we have started that.
Yeah. So if you allow me one more last question from my side. Would it be feasible for me to come and visit you at your office and maybe see your factory as well?
Oh, most welcome, Mr. Vora. Most welcome.
So, would you give me the mail ID or any other common mail ID where I can send the request?
Yeah, we will share through moderator. You want
Even though that is part of our presentation, so you can share your plan to visit our facility. We will arrange the necessary.
No, sir. I am actually investment in Gopal for a while, and my personal expectations or my personal wealth would depend on the success of Gopal, and I have a very large agree. So I had some thoughts on views from my side, which I thought can help the company, and that's the reason why I wanted to meet you.
Yeah, sure. Most welcome. You wish to put us a mail? You can take, my email ID. That, yeah, it's a Naveen.Gupta, Naveen.Gupta at gopalsnacks.com.
NAVEEN.
NAVEEN, Naveen.Gupta @gopalsnacks.com.
Sure, sir.
Thank you. As that was the last question for the day, I would now hand the conference over to the management for closing comments. Over to you, sir.
Thank you. Just a moment. Thank you all for your active participation, and whatever follow-up questions are there, please feel free to get in touch with us. Thank you so much.
Thank you. On behalf of DAM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.
Thank you, ma'am.
Thank you.